Mr. Stagg here. Imagine a company that almost no one outside of Silicon Valley talked about for years. But today, it's one of the hottest stocks on Wall Street, powering the AI revolution. I'm not talking about NVIDIA or AMD or Microsoft. I'm talking about a company that designs and assembles the servers that make artificial intelligence even possible. Supermicro, or SMCI. It's the immigrant founder's dream story, one built from a garage in San Jose to a multi-billion-dollar empire that now competes with Dell and HPE. The rise of Supermicro isn't just about servers. It's about timing, resilience, controversy, and the golden era of AI. Let's dive in. Supermicro begins with its founder, Charles Liang. Born in Taiwan in 1958, Liang grew up during a period of enormous change in the region. Taiwan was emerging as a hub for electronics, with cheap manufacturing and a skilled engineering workforce. Liang was fascinated with computers and electronics from a young age, and his talent quickly showed. After earning his bachelor's degree in electrical engineering from the National Taiwan University of Science and Technology, Liang decided he wanted more. In 1981, he immigrated to the United States to pursue graduate studies. He earned a master's degree in computer engineering from the University of Texas at Arlington, a move that would prove critical. Liang, like so many immigrant founders, saw America as the land of opportunity, where ideas could be turned into companies. After graduation, he moved to Silicon Valley, right as the tech boom was beginning to reshape the world. In the late 1980s, Liang worked for a small company called Chips and Technologies, and later Sun Microsystems, where he gained hands-on experience with computing hardware. But Liang saw a gap in the market. The big tech companies were focused on selling pre-built systems with limited customization. Liang believed there was a massive untapped demand for high-performance, highly configurable servers that could be tailored to the needs of businesses, universities, and eventually data centers. In 1993, he and his wife, Sarah Liu, co-founded Supermicro in San Jose. Like many tech startups of the era, they started in a tiny office, doing everything themselves. Liang's vision was clear: build the most flexible, energy-efficient, and cost-effective servers in the world. He wasn't chasing consumer markets like Dell. Instead, he was targeting engineers, developers, and enterprises who wanted power and customization above all else. From the start, SMCI distinguished itself by refusing to follow the herd. While most server makers were pushing standardized, one-size-fits-all solutions, SMCI embraced modularity. Their servers were customizable, energy-efficient, and tailored to the specific needs of clients, from startups to massive enterprises. This strategy made the company agile and adaptable, able to pivot quickly with technological shifts. While the bigger names laughed at SMCI's niche focus, that very approach would later give them an edge when the AI wave hit, because data centers suddenly demanded tailor-made high-performance machines. Supermicro's breakthrough came with its modular server designs. While rivals like Dell and HPE built fixed systems, Supermicro gave customers the ability to pick and choose configurations. Motherboards, memory, power supply units, all optimized for performance. Liang's engineering-first approach won a loyal customer base, especially among universities and research institutions that needed high-performance computing for science and simulations. Supermicro kept costs down by tightly controlling its supply chain and focusing on in-house design. The company leaned on Taiwan's growing hardware ecosystem while assembling systems in the United States, giving it both flexibility and speed. By the early 2000s, Supermicro had carved out a reputation as the go-to provider for niche high-performance servers. In 2007, Supermicro went public on the Nasdaq under the ticker SMCI. The IPO raised about $64 million and gave the company a boost of legitimacy in the eyes of large enterprises. Still, Supermicro wasn't a household name. It was overshadowed by giants like Dell, HP, and IBM, but that was fine with Liang. He wasn't trying to dominate consumer markets, he wanted to build the most advanced server technology possible. Supermicro kept growing, and by the early 2010s, it was quietly supplying hardware for some of the world's most important companies and institutions. The company's growth accelerated as cloud computing took off. Amazon, Google, and Microsoft were building massive data centers, and they needed specialized servers that could be scaled quickly. Supermicro became a critical piece of the supply chain, even if it wasn't as visible as the big names. Supermicro's rise wasn't without bumps. In 2018, Bloomberg published an explosive report alleging that Chinese spies had planted tiny microchips on Supermicro motherboards to infiltrate US companies. The report sent shockwaves through the industry as Supermicro supplied servers to Apple, Amazon, and even the US government. Supermicro and its customers fiercely denied the allegations, and subsequent investigations found no evidence to support the story. Still, the controversy left a mark, raising questions about supply chain security in the globalized tech world. Another challenge was the razor-thin margins in the server business. For years, Supermicro was profitable, but not spectacular. The company lived in the shadows of Dell and HP, which had the sales teams, marketing budgets, and global brand recognition that Liang's company lacked. But Liang's patience would eventually pay off. Everything changed in the 2020. As artificial intelligence exploded, so did the need for specialized servers with GPUs from NVIDIA. Supermicro was perfectly positioned. Unlike Dell or HP, which were slower to adapt, Supermicro was nimble. It quickly rolled out GPU-optimized servers designed for AI workloads, from training large language models to powering autonomous driving simulations. The true inflection point came with the explosion of artificial intelligence. When OpenAI's ChatGPT launched in 2022, and global companies began racing to build large language models, the demand for high-performance servers with NVIDIA GPUs skyrocketed. SMCI, with its expertise in designing dense, power-efficient racks, was perfectly positioned to capitalize. By 2023, Supermicro's revenue had soared to nearly $10 billion, and its stock price skyrocketed. In just a few years, SMCI went from a relatively unknown mid-cap stock to one of Wall Street's hottest AI plays. Investors who had bought shares in 2020 saw gains of over 1,000%. By early 2024, the company was worth over $60 billion, cementing Charles Liang as one of the most successful yet underrated founders in Silicon Valley history. Once a quiet player, SMCI suddenly found itself at the very center of the AI revolution, with customers ranging from hyperscalers like Microsoft to AI labs scattered across the globe. Today, Supermicro commands around 7% of the global server market, but in the high-performance AI-optimized server niche, its influence is far larger. Revenue has grown in double digits year over year, with gross margins improving as AI demand drives higher-value products. Perhaps the most shocking part of SMCI's story is the meteoric rise of its stock. For years, SMCI traded in obscurity, hovering around $20 to $30 per share. But as AI demand exploded, so did investor interest. By 2024, shares rocketed to over $1,000 at their peak, turning early believers into multimillionaires and making SMCI one of the hottest names on Wall Street. The company's market cap, once a rounding error compared to Dell or HP, surged past $60 billion. If you had invested just $10,000 in SMCI a decade ago, it would now be worth well over $500,000. Supermicro still faces fierce competition. Dell and HP remain giants in the enterprise server market. NVIDIA, while a partner, is also building more of its own systems. Taiwanese rivals like Foxconn and Quanta Computer are always lurking, yet Supermicro has a unique advantage. SMCI's smaller size proved to be an advantage. It could innovate quickly, cut waste, and design racks faster than its larger, slower rivals. In the high-stakes world of AI infrastructure, speed and customization mattered more than name recognition, and this underdog strategy allowed SMCI to carve out a profitable niche where others struggled to keep up. While rivals chase scale, Supermicro thrives on customization and speed to market. Charles Liang isn't a flashy CEO. Unlike Elon Musk or Jensen Huang, he rarely makes headlines. He still runs Supermicro with his wife Sarah, who has been with the company since day one. Together, they own a significant portion of the company, making them billionaires many times over. Estimates place Liang's net worth above $2.5 billion, though it fluctuates with the stock. Despite his wealth, Liang is known for being humble and focused on work rather than fame. The big question for SMCI is what comes next. Can it maintain this breakneck growth, or is it riding a one-time AI bubble? With AI adoption accelerating, cloud providers expanding, and data centers consuming ever more power, demand for SMCI's specialized servers shows no sign of slowing down. Still, risks remain. Competition is heating up, NVIDIA could shift strategies, and geopolitical tensions could impact Taiwan-based supply chains. But if SMCI continues to execute, it could cement itself as the permanent backbone of the AI infrastructure era. What makes SMCI so fascinating is its underdog position. Unlike Apple, which dazzles consumers with sleek marketing, or NVIDIA, which dominates headlines, SMCI quietly powers the backbone of modern computing. It doesn't seek the spotlight, it earns it through performance. To many, SMCI is the unsung hero of the AI revolution, the scrappy, immigrant-founded company that turned modest beginnings into global dominance. This cultural narrative, an overlooked underdog powering billion-dollar AI dreams, is what makes SMCI not just a tech story, but a human story of resilience and ambition. And that's the story of Supermicro, a company that went from a garage startup to a $60 billion AI hardware powerhouse. It's a story of patience, engineering, and seizing the right opportunity at the right time. While Dell and HPE may get more attention, Supermicro is quietly shaping the future of computing. Thanks for watching. If you enjoyed this deep dive into Supermicro's journey, be sure to like, comment, and subscribe to Stag Research, your go-to channel for business deep dives and founder legacies. What do you think? Can Supermicro keep its momentum in the AI era, or will bigger players eventually crush it? Drop your thoughts in the comments below. Mr. Stag, logging off.